Without a doubt, Musk and his company Tesla have been doing extremely well since the company became an IPO. Musk has been critical to Tesla's success. Although people were skeptical about electric vehicles at first, many people are switching to electric cars. The increased acceptance has done wonders for Tesla's growth and its performance in the stock market. It has grown so well that many analysts who were against the company's stock are now switching sides. One such analyst is Jim Cramer. Jim Cramer, formerly bearish on Tesla, now a bullish investor, and Jim Cramer has exposed Tesla's stock sell-off. Why did Jim Cramer switch sides? What do you need to know before investing in Tesla? Let's find out in today's video. As Jim reminded his Mad Money audience on Monday, things can and do go right from time to time. That's why, to make long-term money in investing, you must suspend your short-term cynicism. The expression "hope springs eternal" is generally used negatively. Yet, despite a pandemic, supply chain issues, and increasing inflation, the S&P 500 managed to gain more than 27% last year. You might assume only idiots believe wonderful things happen. Cramer thinks it's better to be an idiot who earns money than a genius who doesn't. Investing in the stock market may be at times, well, time-consuming. Today, as we examine the fundamentals of Tesla stock, we'll look at some information gleaned from Jim Cramer. The Federal Reserve Chairman, Jerome Powell, recently mentioned the federal government's bond buying program. He already indicated that it would be winding down as the pandemic subsides, but lately, he seems to have changed his tune. Powell said bond buying would be ending sooner than expected, and that was all it took to send investors into a panic. Cramer elaborated that the timing couldn't have been worse given investors' concerns over the Omicron variant. So what does this mean for the typical index fund investor? According to Cramer, people are purchasing stocks for the long run. Thus, the recent short-term slump is nothing more than a buying opportunity. Nevertheless, he remained cautious, telling viewers to wait until the first confirmed case of Omicron appeared in the United States, which spurred more selling and marked a short-term bottom. In the meantime, investors can still buy technology stocks like Amazon, Microsoft, and Tesla, and dividend stocks, which will continue to do well in this environment. At the end of the day, it's better that the Fed announced its plans. Cramer explains that there are 4 types of sellers in the stock market. The first group is afraid of inflation and will use any opportunity to scare you out of stocks. The second group expected the Fed to tighten, but did not expect it to tighten so quickly. The third group is simply trying to lock in their gains so they can buy back in at a lower price. The fourth group is concerned about an Omicron slowdown. The issue is that none of these groups can be correct. If there's a slowdown, the Fed will not tighten as quickly. However, if the Fed does tighten, things must not be as awful as anticipated, implying that buyers will return to the market soon, which is why it makes sense to take advantage of the dip. For starters, most people think of Amazon as an e-commerce company. It has become the choice online marketplace for millions worldwide for good reason. However, the company also participates in 2 other expanding industries, which could fuel significant growth in the coming decade. The company competes in 3 high-growth industries: e-commerce, cloud computing, and digital advertising. The market cap is now $1.7 trillion and is likely to rise in the future years. To put its competitive advantage into perspective, Amazon has a 41% market share on the United States e-commerce business. In contrast, Walmart has a 6.6% market share, which is several times larger than the closest competitor. In addition, Amazon has a 32% worldwide market share in cloud computing, while Microsoft only has a 21% stake. The operating margin on AWS was around 29% in the most recent quarter, compared to approximately 4% in its North American e-commerce business and 1% in its international e-commerce business. This is the company's cash flow growth engine. If you're an Amazon shareholder, you might be concerned that the company has generated negative free cash flow over the last 12 months. Cash from operations has actually dropped about 1.2%. Amazon is investing aggressively in expanding its fulfillment network even now, during the most recent quarter. CEO Andy Jassy stated that Amazon has nearly quadrupled the scale of its fulfillment network since the start of the epidemic. He believes this would help give them that fantastic delivery experience for consumers and enhance their competitive edge. Microsoft released its financial results for Q2 of 2022 on the 25th of January, reporting $51.7 billion in revenue and $18.8 billion in net profits. Revenue has climbed by 20%, while net income has increased by 21%. Microsoft's Office, cloud services, and Windows all contributed to the company's revenue growth in the third quarter. In examining first quarter fiscal year 2022 results and full year fiscal 2021 results, nearly all segments have shown significant growth except devices, server products, and cloud services, like Microsoft Azure and several other items. Investors will want to see continued progress here. Microsoft's margins have been improving recently, which is great news for shareholders. The EBITDA margin is now above 50, which is very noteworthy. Much of this can also be attributable to the intelligent cloud's higher operating income. For example, Microsoft has a strong balance sheet position despite significant capital returns to shareholders through buybacks and dividends. In a recent report, the company reported over $150 billion in cash and short-term investments on hand, compared to $50 billion in long-term debt. The cash and short-term investment balance account for more than 5% of the current market cap. The net debt puts the enterprise value at $2.24 trillion, or about $50 billion less than the market cap. Shareholders should expect a similar capital structure when the second quarter profits are disclosed. Given the current valuation and market conditions, Microsoft's recent drop from all-time highs may provide a great entry point for a chance to accumulate more shares. Incremental acquiring may be the best option for long-term investors. So what about Tesla stock? Elon Musk is anticipated to return to the results call. Does this imply positive news? Tesla recently disclosed its fourth quarter profits, with investors anticipating the return of CEO Elon Musk to the post-results call and braced for potentially concerning news about the Cybertruck and supply chain difficulties. Musk told Wall Street that he was unlikely to be on future Tesla earnings calls unless he had something important to say. He wasn't at the electric vehicle maker's third quarter call in October 2021. There have been reports that the Cybertruck has been delayed even further. The truck, Tesla's first foray into pickups, which Americans have favored for decades, was expected to begin this year and reach volume production in early 2023. Tesla is already a few years behind schedule and several months later than electric pickup trucks from General Motors, Ford, and other original equipment manufacturers, as well as newcomers such as Rivian. So what does this imply for Tesla? Should investors expect good news? Tesla surprised Wall Street with record fourth quarter sales that increased nearly 90% from the same period in 2020. All signs point to another strong quarter for Tesla, which has put together an impressive streak of earnings beats. As a result, Tesla's record quarterly production and sales give it significant bottom line leverage. Given the high fixed costs of auto manufacturing, focal points for earnings include Tesla's 2022 guidance timelines for production ramp-ups at new factories under construction in Texas and Germany, mainly in light of semiconductor shortages and supply chain issues, as well as the next steps in its long-term plan to increase production between 2020 and 2030. Even without that direct guidance, Deutsche Bank's Emanuel Rosner anticipates a positive update from Tesla in growth and margin potential for 2022, as well as a cadence of new product and technology introductions. Other possible things to anticipate for the quarter include the timing of production ramp-up for Tesla's new facilities in Austin, Texas and Germany, as well as details regarding the company's alternative energy sector, the state of its in-house battery manufacturing, and sales in China. With the two new factories coming online, Piper Sandler analyst Alexander Potter believes that Tesla has enough capacity to exceed production estimates. Still, he believes that China's zero-COVID policy could threaten operations in Shanghai. Tesla started 2022 on a good note by reporting it delivered more cars than expected in 2021, so there's no reason why it shouldn't continue to have a great year. Tesla is the most important player in this market, owing to its cutting-edge technology and consumer devotion, which means it will automatically benefit from the industry's expansion. So what do you think of Jim Cramer's view on Tesla stock? Comment down below.